Good evening and welcome to the Authentic Joe Show. I'm Jolena Johnson. My first name is Joe and my middle name is Lena. Joe means love and Lena means light, and I'm so excited to bring this show to you live from Los Angeles. Many of you don't know, but Los Angeles was my home for almost a decade and I love it here. I'm back, so I have another set. I hope you don't mind. And I can't wait to get into tonight's commentary. I have a great guest who's going to talk to us about financial well being, what to do with your money. And it may surprise you some of the things she says, what not to do with your money. So without further ado, I'm going to welcome our guest and we're going to get started.
Hi,
Hi, Tasha.
hello.
How are you?
Great. How are you? Your set looks amazing.
Well, thank you. I want to welcome Tasha. She's all the way on the East Coast, and I'm all the way on the West Coast. And Tasha Hardge is a tax strategist. She does financial advising, and she is speaking to us. So you're going to hear that New York accent to get us started, get us going, and to give us some great advice. So I just want to say hello to everyone who's live on our YouTube and live on our Facebook. If you have any comments, if you have any questions, feel free to join in. If someone can put our stream up on Facebook and on YouTube, so if anybody wants to join the studio, and we look forward to your comments. And also, I had several people write and say, "Hey, I'm looking forward to hearing the show tonight and everything, watching the show." So I just want to say thank you so much to our loyal subscribers, and please go ahead and hit the like button and the share button. We can use it all. Okay. So Tasha, when we spoke, I just want to get right into it. Okay. You said, you told me, don't put your money in banks. That's where I want to start. And I'm like, what is this lady talking about? So let's get started.
That's
Why
right.
did you say not to put your money in a bank?
That's right. So you're going to see me peeking over here at my scratch notes. Okay. So basically, here's what's going on with banks. And I know we've all been taught, right? We save our money in the banks. But in case you're not aware of what they're doing, when we put our money in the banks, they're loaning it out for mortgages. When people come and they want to take out mortgages, they're loaning them our money for people to get their mortgages. They're doing personal loans, business loans, all sorts of things, right? So we go and we set up these accounts in the bank. We're doing, certificates of deposits, we're doing savings accounts and everything like that. And then they're paying us pennies on the dollar. Meanwhile, they're loaning out. So let's take, for example, maybe someone came to get in the mortgage. Now, maybe we, as the consumer, you threw in there, let's say you threw in $20,000 in your savings account. They as soon as you walk out that door, that $20,000 is being loaned out to someone who wants to come and buy a home, buy a car, take out a business loan, a personal loan, and then they charge that customer good gobs of interest, okay? And then guess what they pay back to you? You know that APY, like the 1%, the 2%, but mind you, they charge the consumer with whatever it is that they charge them on that product, okay? And then they come back and give us, so we're helping them get rich, essentially, okay? We're helping them get rich, and so they don't even save their money in the bank. Banks don't even save their own money in banks. They invest their money. Okay, so that's one of the main things that when we begin to think to grow our money, like you can't save your way to wealth. Okay, you can't save your way to wealth. You can invest your way to wealth. Investing can really help you grow your money. Can't save your way to wealth. Okay.
Okay, hold on. You can't save your way to wealth.
That's right.
Okay, are you going to tell us how to build wealth then? Because I was taught, and not when I was young, it was when I was an adult, that there are three things you can do with your money. You can save it, you can spend it, and you can earn it. That's it. Save, spend, and earn. Would you agree?
I would agree. And that's funny that you say that because I have that in my notes. But here's the thing with those three things: earning it, saving it, and spending it. We're earning it wrong because we're trading our time for dollars. That's problem number one. Okay. So we're earning it wrong. We have to begin to learn how to put our money to work for us. That's what the wealthy people do. Wealthy people don't work for their money, they put their money to work for them. So we got to begin to follow. And we don't, the funny thing is, a lot of people think we need all this money to begin to do what wealthy people do. We can start with micro money. Okay, you can start with micro money to begin to pattern the behavior of what wealthy people do. So that's first of all, we need to begin to learn how to earn money while we sleep. Okay, because there's only 24 hours in a day, and I don't care if you go out here and get 2 and 3 jobs. Okay, your body has to rest, and this is why we have to think of other ways to earn the money. So that's problem number one. We're earning it wrong, trading our time for dollars. Okay, the second thing is we're saving it wrong because we're saving it in places like banks, you know, that I just went over is not really giving us a return on our investment. So we're saving it wrong. Savings accounts are really essentially like for an emergency. Like, yes, we need our checking account because we need to do operational things, paying bills and all that sorts of stuff. Savings accounts, yeah, for an emergency to always have something to quickly liquidate, absolutely. But not when it comes to trying to build wealth and grow our money. And then we're spending it wrong because most of us spend on liabilities and not enough on assets. We're not spending enough on things that can produce more income, such as the assets. We got to learn how to become the producer and not so much the consumer. When I see people race out and get, the latest iPhone, right? Okay. But I say to myself, okay, we go out and we buy this. Oh, everyone's upgrading to the new. Okay, but how much stock in Apple do you own? You know what I mean? So we got to begin to think of these kinds of things. I try to invest where I spend my money. And funny that we say banks because I actually have some stock in the banks that I bank with, and they pay dividends. So that's the part that makes sense. Okay, maybe you're going to park some money here, but then you need to also own some stock in that. I also
Okay. Stop it.
I know I'm throwing a lot at you, and I'm
Okay,
just halfway
okay.
through.
You're doing good, but hold on a second. Okay. First of all, you said something about we can't trade hours for dollars. I think that's what you said. Is this
Right.
correct? Okay. So if we can't trade hours for dollars, what do we need to do? Like you said, we're working for the hours. The wealthy don't do that. But if we only have our work and we don't have any savings, what can we actually do to be responsible with our money, especially since you're not recommending putting it in the bank? Just answer that question first.
That's where investing comes in. That's
Okay.
where investing comes in because investing can be the very thing to help you make money without trading your time for dollars. Investing.
Okay. And okay, because you have a lot to cover. So it's okay. I just, okay. So you had talked about a small investment. I think you had a couple of different ones, but can you talk about one investment that you've done? I don't know if that was the 1,500 or the 2,500. Can you talk about that and what someone could do if they wanted to replicate that? And then I know you have some slides and things like that. So I'm just asking a question to help people, the people who are on right now. If you can put the name of the show up, we're talking about fixing finances for 2023. That would be fantastic with Ktasha Hardge, who is a tax consultant and also a financial advisor. Okay. So, Ktasha, can you tell us what exactly could we do to take our hard earned hourly cash and turn it into an investment that would make sense?
Okay, so as mentioned earlier, I do have stocks in various things, right? I do own stocks in various things. But at the same time, what happens with stocks, it can be, I call it like a heartbeat, right? Stocks are going up and down. The values goes up and down every minute. Okay. So I actually was introduced to a company that when you invest your money isn't fluctuating like that. It's stable. Okay. Now, what they do is they do trading. Okay. I don't know if you've heard of day trading or traders. I actually don't know how to trade, but I know people who do trading, and I do understand that it has the potential to bring you all sorts of money. I personally know a trader who's very close to me, and he often makes quite a bit of money when he's doing trades. Okay. But I don't know how to trade. So when I came across this company who does that, that was just the most beautiful thing ever. And I decided to get started with about $1,000. Okay.
Okay.
And so, yeah. So did you have a question? Oh no, just keep going.
Okay. So no, so I mean I want to know. So how would I do that? I don't have that friend. So I want somebody to say, okay, if I have $500, what can I do with my money to turn it into, I don't know, 750, 1,000, I don't know. What could I do? What's something?
Well, I'm actually going to show you something. If I'm able, because I want to show you something about compound interest, because the company that I'm investing with, okay, that trades our money, they
Mhm.
don't technically pay compound interest, but I like to say they mirror it. I like to use the term they mirror it because they're reinvesting our earnings, our weekly earnings, because we actually earn interest weekly.
Okay.
Okay, so yeah, so if I can share my screen that I want to try and do, I can actually show you a little snippet of what it means to kind of earn what the power of compound interest. Because I will tell you one thing, people who don't understand compound interest pay it, but if you
Mhm.
understand compound interest, you earn it.
Okay.
Okay,
Okay.
so
Hmm.
I'm going to do that. Tell me when I'm sharing my screen, or how do I? Okay, let's see if this works.
Okay, everyone, we're speaking with Tasha Hardge. She is a, while we're waiting, I'm just talking to him, Tasha.
Okay.
She is a tax advisor and a financial, excuse me, a tax strategist and a financial advisor, and she's going to show us about compound interest. She's also talked to us about what banks do with our money and what we should do with our money. So she's going to help us to make some good decisions. Also, I want you all to hang in here because she's going to talk about some tax strategies. If you are, let me see, I'm getting a note. I'm getting a note from the producers. Let's see here. Click present and the tab. That's what they're saying. Click present and then the tab. Does that help, Tasha?
I think so, yeah.
Okay. We're getting into all this technology, you all, so just bear with us. You know, we're doing it from the east and the west coast and the Midwest too. We got a lot going on. Okay, does that help?
Yeah, let me just check out something here.
Okay.
Give me because I think I have to give some sort of access. Okay.
Yes. Hmm.
All right. Um,
Thank you for watching the Authentic Joe Show live on Facebook as well as on YouTube. We're talking about fixing our finances for 2023. We're having a little technical challenge, but it's getting there. Okay.
yeah, actually, okay. So it doesn't seem like it's gonna let me do it because I would have to go into, oh wait, is it showing it here? Okay, no, it doesn't seem like it's letting me do it.
Okay. All right.
Okay,
So,
but here's what I will do. I'm going to, if I type in the chat, can they see this site I'm pulling up?
yes.
Okay, so
So Tasha's going to tell us a little bit about compound interest and why it matters. So when
yeah,
you finish typing, can you tell us why compound interest matters before we pull up anything or as we're pulling up?
yes. Okay, so here's why it matters. Now, I will tell you, compound interest can actually hurt us, and it does hurt us on this side when we are doing things like mortgages and car loans and things like that. We're hurting with compound interest, okay, because we're paying it. But if we could learn how to get on the other side of that and earn it, then of course we're in a much better situation. So the site I just put up called thecalculatorsite.com, it is totally independent of the company I'm with, but what
Okay,
it does, mhm.
I don't see it.
Oh, you
What
don't
is it
see it?
called
I
again?
typed
I'm
it in the chat.
Oh, the calculatorsite.com. Okay, there it is. Okay. Okay.
Okay. So
Okay.
yes. So now actually you can even go to it, and I'm going to go to it on my screen over here. Okay, I'm going to show you exactly what I want you to do, and if the viewers are watching, they can do it too.
Okay,
Okay.
now I don't know how this is going to work because some people are watching on one device. So if you all have a second device, try that. Yeah, I don't know how that's going to work, but we're going to try it. Don't make it too complex. Can we talk about
Okay.
like
Okay. Yeah,
$1.50
you know
or
what I
$1
will
and
do. Tell me
$10?
this. Can you see here when I put something here?
Yes. Yes.
Okay, so
Yes.
here's what I'm gonna do. I'm gonna show you right here, and it's gonna be
Okay.
super quick. Okay.
Okay,
So now
Andrea, it was thecalculatorsite.com. Let me put it there. It is. If you all have an opportunity, go to thecalculatorsite.com and we're going to learn a little bit about compound interest. And I'm going to work with it on my phone and we're going to
yes.
see what she's
So
talking about here.
everybody should be like here. Okay,
Okay.
right?
Okay.
Now I want you to scroll down and I want you to look for the particular calculator that says compound interest daily and hit
Got
that.
it.
Okay.
Okay.
Now, I know we see something that's highlighted in orange that says daily compounding. I need you to hit compound interest. Hit that tab.
Okay.
Okay. Come down in the initial balance. And we're going to take something. Yeah, that's perfect. We're going to take something like $500, like you said. Okay. Put
Okay.
$500
Okay.
in the initial balance.
Okay.
And on average, the interest varies. Interest always varies. But on average, we're going to go with a 3% number. But in the
Okay.
drop down, I want you to hit weekly because, as mentioned, we get our interest weekly. So now, yes, just like that.
Okay.
Now, let's see what this can do because one thing about investing, sometimes it's good to do long term, right? So let's say would you say we could go with an 8-year plan? You good with that?
For $500, 8 years. Okay,
Mhm.
sure.
Okay. Put 8. And then I want you to, on that other drop down compound interval, select it. And I want you to hit weekly again. You see that?
Okay. Okay.
And then I
Yes.
want you to hit
Okay.
calculate.
That can't be right. That's 100 and I have over $100 million, $109 million. That
Listen,
cannot be right.
if it's one thing I will tell you, if it's
What is
one
she
thing I
talking?
will tell
What
you,
is she talking about, y'all?
what do we know, right? Men lie, women lie, numbers don't lie.
I'm sorry. Okay, Tasha just had us go to the calculatorsite.com and we are calculating interest based on $500 with an 8-year investment and with compound interest. And she is saying that we can earn, this is like billions. How is that possible? I don't understand that.
Well,
Are you,
because when you're reinvesting, so remember I said we earn our interest weekly, right? So
right?
here's how this works. Every week, instead of like taking the money out, whatever interest we earn that week, it range. Like last week, the interest was 2.68%. The week before that was about 2.88%. When the markets were a little volatile a few weeks ago, we actually came in a bit low, which I say we're getting spoiled because we came in at 1.66% that week. But that's still
Okay.
great because sometimes in a month in a bank or in a year in a bank, you're getting 1% for the year. We got 1.66% that week. So it definitely does vary. You know what I mean?
Okay, so I put 1% interest. Okay, I just because I had to try my little calculator. Okay, you
Okay.
all, she's trying to help me here. Okay, she's
Okay.
trying to help all of us. Okay, so she said, let me see if I have this understanding. So I'm trying to help you all. Okay, so we're on the calculatorsite.com.
Mm-hmm.
We put in compound interest
Make
instead
sure
of
it's
daily compounding, and then we have the dollar as the currency. Our initial balance is $500. I put in 1% weekly, and
for
then I
eight
keep
years,
8 years, and then we want to compound weekly. And
Mm-hmm.
then we put in calculate. And when I did that, that is $30,000.
That's right.
Oh my gosh, over 8 years. Now,
Over eight
you
years.
have, listen, where do I send my $500? And I'm not
I'm
even
going to put up
kidding.
the link in a few minutes. So now here's the thing. I will say this. Now, what I want to say is that one thing the company does different,
Okay.
I'm going to say this. They use the bridge of, and sometimes people get a little intimidated, but here's the thing. You do need to deposit your funding with crypto. Okay, so I chose Bitcoin,
She just
but
said the word
hold
crypto,
up,
you all. Uh-oh, uh-oh,
hold
uh-oh, uh-oh.
up. Now here's the tricky part, and you got to follow me for a minute.
Okay.
It's strictly as a bridge. It's strictly as a bridge. When I say that, is that it's like this: you go into a foreign country, right, and you got to convert to their currency. But once you're in the country, you're over there making the money, and now when you exit the country, you got to convert it back to your U.S. dollar. Same concept here. Okay, so yes, when I invested my thousand, I bought
Okay.
$1,000 of Bitcoin, sent it into the company. But here's the thing that's great about this company: we don't have to watch our money because it's not going up and down. It's just a bridge to get it in. okay, because that's the currency they accept. But once it's in the company, it's like it converts back to US dollar because the value is stable. So literally, as soon as I invested my thousand, that when I got started on August 30th, okay, um, as soon as I put it in, it doesn't matter what happened with Bitcoin. My money that got in is still 1,000, and it stayed at 1,000. So it didn't
Okay.
drop. If in the next hour Bitcoin dropped, no, my money didn't drop. That's not how the company works at all.
Okay. So you deposited $1,000 in August of 2022 into your account. Okay. Do you know how much money you have right now?
I do. Now, my account to date has earned an interest. My interest now at this point, yeah, I just checked the other day, it's over $700 in interest.
Really?
Yes.
That is amazing. Okay, so tell us, if we want those results, do we contact you? Can you help us to do that, or do we have to
Oh, yeah,
go to another?
absolutely. Yes. I'm going to have a link that I'll share with you, and I will be transparent and say it's an affiliate link that I
Okay,
put up, you know.
okay,
So yes, but yes, I do have, and that's the way you can get started, because you kind of got to be invited in, you know what I
okay,
mean? So yeah.
okay,
And so
okay.
yes. Mhm.
Can you do me? I'm sorry. Can you do me a favor and give us your website? So we have
Yeah.
the calculatorsite.com, but or your website or your however you want people to contact you.
Absolutely. I'm going to put it right here. So for people who want to get started, this is my link. And let me
Okay, so
get
you
over
all listen. While she's doing this, you see she has put her glasses on so she can be all
there.
official to what she's doing to give us this money information. I'm just sitting here. This is about fixing finances for 2023. And she is showing us how, if we are willing to take $500 and follow her system and keep that same $500 invested for 8 years, we could potentially earn $30,000 only earning 1% interest. That is fantastic. I think we all need to do that. And then in 10 years, you all need to get back on the Authentic Joe show and tell me how much money you made, and what your
Absolutely.
percentage is, and then give me some of it.
Absolutely.
Oh my goodness, I'm so
Absolutely.
excited.
Absolutely.
Okay, so
Absolutely.
this is her website. It is in the comments here. So please, if you are watching on Facebook, come on over to YouTube. We're putting it in here. Hopefully, you can see these comments on Facebook as well. But it's called moneystack.com, novatechfx.com. So this
Oh,
is
wait,
very.
wait. You know what? I'm sorry. I shouldn't
That's
have.
not the right one.
It's a not.com. It's first. I didn't
Okay,
mean to
so
put
we need to take that
.com
off.
twice.
Okay, I'm
Yeah.
gonna take that off.
Okay. I didn't mean to put, it's Money Stack.
I don't know if we can get rid of that without putting you out. Okay.
That's okay. Well,
Okay,
now,
just post
even now
this.
I sent it again.
Okay. Okay. This is awesome, you guys. I'm so excited. Okay. So I asked Tasha to come on because if
Me
you all
too.
remember, maybe about 4 weeks ago, we did a money mindset show. Okay, thank you, Andrea, for coming on. We did a money mindset show. Where's the link? I don't see it.
I put it in the chat.
Okay, put it in there one more time, okay?
Okay.
Because I see .com. I don't see this. I see the first one. Okay, there it is.
You see it?
It's okay.com. Yes. Okay. Awesome. Okay. All right.
That's
So
perfect. Yes,
stay
that's
with
perfect.
us, you all, and you can contact Tasha if you want to invest with her. Now, I'm going to invest with her because I think it's worth it to try $500 and see what I can come up with in 30 years. I mean, in 8 years. Had I known this, my life could be different right now. For $500, if you think about all the money you waste, I don't know. I'm not trying to be mad at you all, but some of you all like Starbucks. And if you think about what you're spending every single day, if you think about, if you go to breakfast, lunch, or dinner, you may spend, let's say, $20 a day eating out. And $20 a day times 7 days a week is $140. And $140 times 4 weeks is what? I don't have a Oh, I guess I do have a calculator. What is it? Who knows the answer? 140. So if we go, okay, I got to use my phone. Okay, so if we go $140 times 4 weeks, that's $560 that we waste in food. Yes, Chuck Deasy says a lot. That's
Right.
$560 we waste every single month. Now, if you all are just joining us, do you hear what I'm saying? She's showing us how we can take $500, keep that same $500 in for 8 years, and potentially earn $30,000. That's big money. So can you imagine if you just said, you know what, I'm going to cut out X, Y, and Z for 1 month, even though I'm earning this hourly income, and then I'm going to put it in there and let that money grow. Now, can we also continue to add money to that, Tasha? And then what are the risks? So
Yes,
let's say if we have
absolutely.
500, okay, let's say I just decide, okay, I'm going to put an initial investment of 500. Then can I go back next month and put 250 and put 250 and it'll still, now do I have to say 8 years? So then it all starts compound. So is it compounding separately or is it adding to,
No, it'll be adding to it. That's right. It'll be adding to it. So if you, because every Friday when you get your interest, it's reinvested, right? And everything is
okay.
set to auto. It's reinvesting. But yes, if you choose to independently send in a little more and a little more, and a lot of people do that because we're doing it anyway. When you think about it in banks, right? When we're putting our, I had someone who I helped get started with the investment, and she was sharing with me that she had $20,000 sitting in her bank account for a year. I said, well, about how long has that been sitting there? She said about a year. And I said, and how much interest has your money earned in a year? She said $3. I said, okay, now I'm going to take you over here and tell you if you were with the company that I'm with in 1 year with your 20,000. Let's put that in the
That's
calculator.
what I'm getting ready to do right now. Okay. Okay. I'm going to the look, I'm getting excited. I'm getting excited. I can't kidding
Put
you.
it. You
Okay,
put
so now
what
we're
you
gonna go. Okay, we're going to the calculators, the calculatorsite.com, you all. That's where I'm going. So I'm right here on the calculatorsite.com. All right. Now, in the top, instead of when you get there, it says daily compounding, change it to compound interest. Change it to compound interest. What are we changing it to, Tasha?
Yes,
Compound interest. Okay. And then currency
That's
is the
right.
dollar. And initial balance, we're going to put in $20,000. Woo, $20,000. Okay. And
20,000.
then
And we're gonna put it to 1 year. Remember, change the 8 because I want to show
okay,
you
hold on though. I want to just do
that.
the interest rate at 1%
Okay,
interest. Okay,
1%
1%
and
interest,
change
and
it
then
to
we're gonna do
one
it
year
1 year instead of 8 years. So if,
instead of
if you all
eight
are
years.
just joining us, and then we're gonna say compound interval weekly for 52 weeks a year. Okay, and then we go down and we calculate. Ooh, ooh, she would
In
have
one
earned
year.
$13,553 in interest in 1 year, but she earned $3 at banks. Oh my
Right,
goodness.
right, right. That's how
That is
she felt.
amazing.
That's
That
how
is
she felt.
okay. So let's go back. Okay. I want to review this because we're going to have to move on to something else, but this is so
Okay,
exciting. So
absolutely.
explain to me. Okay. Let me say it to you and see if I have an understanding. So when you first came on, you said, I don't recommend investing with banks because banks use our money to buy real estate and to do other investments. But if we take our own money and put it in an investment tool similar to what you just talked about, then we can get the type of interest that banks get on our money.
Right, right, right.
Okay. Okay. So that's
Yeah.
big. So if you all, so what we did was somebody had $20,000. They put it in their bank. They earned $3 interest on $20,000 for 1 year. But if we do this, the total amount is $33,553.78. And that includes the initial investment plus $13,553.78 that they earned in 1 year. That is remarkable. So I love this because I know people go into money market accounts, they do all these type of things. So if you have extra money sitting around, then you need to try this. Tasha, tell us, is there a minimum amount we can start with? Is 250 too low or
So
500? What do
I will say you do. Okay, so let me also say now there is a monthly management fee of $25. I mean, what's
okay.
$25? But you don't have to put in any credit card or debit cards or nothing like that. They deduct it from your once a month from your balance. Okay.
Okay.
So every
Okay.
week you're getting your interest, and then once a month they're deducting the $25 management fee. Okay.
Okay.
Because like I said, they're trading our money, they're doing all these trades and all this stuff. So obviously, they deserve a fee. Now,
Okay.
what I will say is, so to answer your question, the reason why I pointed that out, because 500 is a good measurement where you won't really feel that 25 when they take it out every month, right? So
Okay.
if you come in with something lower, you can get started with $100. But I tell people like this, so I suggest to them, if you start with something less than 500, then I would recommend every month putting in the 25 that they're going to take. Like keep sending in 25 because this way you want to feel your money growing. That's
Gotcha.
what I would
Gotcha.
recommend.
Okay. I did a low calculator and I just put in 1%. Now, this is if y'all didn't hear what Tasha said. She's been getting around 3% interest, 2.6% interest, those type things. And I'm just being super conservative and I put in 1% interest. So I put in 1% interest on $500, 1% interest to calculate weekly, and that still comes up to $338.84 in interest for the year. So that's low, but that's on the 1% scale. So if I go back and I change it to 2%, which is probably more likely, right? 2%.
Right. That's more likely.
Okay. So then I calculate that. And if the interest rate is 2%, you're earning $900.16 in 1 year. That is fantastic. You guys, this is a game changer. Okay, Tasha, I have to be me. Okay. When I was growing up many years ago, I went to school in the 80s. Okay. They taught us how to type, and they taught us how to address envelopes, and they taught us basic math that I didn't do very well. Okay. But they didn't teach us about money.
That's right.
They didn't teach us about saving. They didn't teach us about investing. They didn't teach us the importance of what to do with our money. So we learned how to spend money very well. But I promise you, it's not till this very night when I'm sitting here in Los Angeles, California, and you are out in New York that I have learned what I can do with my extra coins. Okay. And so instead of buying anything else in California, while I am here, I'm going to be investing that money here and I get paid tomorrow.
That's right. That's right. And you know what I like to say about investing? Here's what my belief is, and we all have our own beliefs. Yes, investing is risky, but you know what else is risky? Not investing. Not investing is just as risky as investing. So I'd rather be in it to win it. Right?
So tell us, what is the risk of this particular strategy? Okay, because I'm going to put your site back up. What is the risk of this particular strategy in terms of, because I know there are some investments, like if they're in the stock market, they can go up and down. And then there's a green line investment that a lot of people do to be very conservative. So what is the risk? Can we potentially lose our $500 that we're investing?
So I will say this, investing is always a risk. Honestly, even people who put their money into a 401k, it's still a risk. It's all a risk. So what I say to people, if you feel some sort of way, I personally try not to invest with emotion behind it. But if you're an emotional investor, then you know what? Once your money hits where you've doubled, let's say with your 500 makes 1,000, pull out your 500, pull it out. Right. And so you'll be starting from scratch again, but at least you'll feel better that you took out your initial investment. Right.
Okay.
So
very good.
Feeling so bad. God forbid if something should happen. What did you lose? You took out your initial investment. So that's what I would say.
Okay, that's very good. Well, this is going to be on the internet forever. So this is can we don't see her name up. Let me see if I take that off. Okay, there it is. Okay, so I'm speaking with Ktasha Hardge. This show is called Fixing Your Finances for 2023, and in the first 33 minutes, we got it, baby. We got it. Okay, so let's go on because I don't want to keep you all night. But now let's talk about taxes. Okay, my big concern. I'm gonna tell you my biggest concern right now. I use Cash App and PayPal, and people have been sending me Zelle, and like family members have been sending me Zelle and things like that. So I would like to know what to do, because I know right now anything over $600, you're supposed to get a something K statement for $600, and you're getting. Can you tell us?
So those payments that you mentioned, are those personal transactions or business transactions?
Well, that's the thing. I have always used it for both. But like, let's say if one of my family members sends me money for another family member because I'm a caretaker, then they'll just send that money. So that's not income. That's money to maybe pay for a bill or groceries or something for a family member. You know what I mean? So it's kind of all mixed in there. And so I'm like, what am I going to do?
Okay, so here's the thing. A lot of people were getting confused with that. They're actually only referring to the business transactions, right? So whenever you have those funds coming in, and so far they're not on Zelle yet, but they're definitely paying attention to all the other apps, Cash App, PayPal, Venmo, and all of them. If you're selling services or products and you're using those apps to collect money, yes, that part of it you will receive a 1099K on it, and you will be taxed on it.
So what happens if I know? So for example, I have a relative who's in business and I'm also in business, but we often exchange money because of our other relative. I'm just trying not to tell all my personal business, okay?
Right, right.
But we are both in, we have our own businesses. So how could I distinguish between, would I be able to say this is family related? I mean,
Well, I will tell you what I actually do, and maybe I don't know if everyone would want to try this strategy, but I actually have two cash apps. I actually have, yeah, one of my cash apps, and I use a separate email address, is for my personal transactions. And my second cash app, I use my business email, and then that's for my business transactions. So that kind of simplifies it. And Cash App actually lets you identify the account as business. You see what I'm
okay,
saying? So
gotcha.
yeah.
Gotcha.
Mhm.
Okay. All right. That helps. Okay. So, what are three things we know? I'm just throwing it out here. What are three things we need to know about taxes or more?
I will say this. One of the main things is that I hate to be the bearer of bad news, but the best way to beat them taxes is by being a business owner or having rental property. Okay. If you're a
Okay.
traditional worker, unfortunately, you don't really have any leverage. I'm just being honest, especially with how the tax laws are changing. Now they've raised something called the standard deduction. So most people, if you've noticed, can't even itemize anymore, even no matter what home you own. If you live in the home, you can't really itemize anymore because they've raised the standard deduction. So you no longer qualify to itemize. But guess what? If you had a home business, now you can write off so many things in your house. You can write off your part of your mortgage interest, part of your utilities, part of various things, okay, that you normally couldn't write off, even repairs and writing off a home office, a part of your expense in the home. So that's one thing there. That's what I would say. Another thing that's important is to know your tax bracket and your percentage. Like for an example, and I had sent in a slide. I don't know if it's available to put up, but I had sent in a
Yeah, we
slide.
do have that.
Okay.
Do you want me to? Let's see. That's it. Yes.
Well, that was the website, but I actually sent an image in, if
Do we
that's
have that,
available.
producer, or is that the only one we got? Okay, I'm gonna.
One, yeah,
Oh,
one.
whoops.
Okay, maybe he's looking for it. Okay, let's see. Those are all links. It was an actual slide I sent to the email.
To my email or to my producer's email?
Your email.
I didn't get it.
Oh, you
I
didn't
didn't
get
know.
it? Okay. All right, it's fine. So
No.
I will tell you what it was. Okay,
Okay.
so let me just put on my reading glasses again, and I'll give you an
Okay.
example of what I mean when I say it's important to know your tax bracket. And let's see. Okay. Okay, so let's say, for instance, let's take a single person who's the head of a household. Maybe it's a single mom or a single dad. They have a few kids. Okay, let's say you make 100,000 per year. Your
Okay.
your you're actually taxed at a 24%. Okay, you're taxed at 24%.
Ooh.
Yeah, exactly. But here's the thing. So the whole thing is not taxed 24%. It's like a breakdown. And actually, he can put the site back up for the tax brackets, because I want to show that that's the source, because you can go back to that site and see where you fit in. But basically, how this works is that your first $15,700 is taxed at 10%. Then the next section, if you take 15,701 all the way up to 59,850, that portion is taxed at 12%. And it continues to go up in increments. The next increment is your income between 59,851 all the way up to 95,350 is taxed at 22%. And then the rest that you make after the 95,351 up to your 100K is taxed at 24%. There it is. Yeah.
Okay.
Okay.
I'm sorry about this, guys. I'm sorry. I want to apologize to you. It came to my email, but it went to my junk email, and I didn't know it was there. So I was
Oh,
able to just pull it
okay.
up. Okay. All
Yeah.
right. So
So, and that's just a sample.
okay, hold on. So let's clarify. So you're giving us the 2023 tax brackets for the head of household, and you're saying if you have $100,000 in income, you're taxed at a 24% tax bracket. Your first 15,700 is taxed at 10%, and then it goes up. Okay,
Right.
so I'm gonna send this to my producer, and then they're gonna try to get it up on the screen. So hold on one second.
Okay.
Let me forward it just so we can get it up. Okay, so why does this matter? Why does our tax bracket matter?
Because this gives you an idea on how to pretty much plan for your taxes and figure out what your liability for the year is going to be. Okay, you
Okay.
can do some math, and this can kind of, because everyone should really be doing tax planning. Tax planning is not just for wealthy people, everyone should be
Okay.
doing tax planning. And this is one of the key things to know your tax bracket so you can do math and get at least a rough estimate of how much your liability is going to be for the year. So when you hear people at the end of the year and then they're filing their taxes, well, why do I owe? Basically, because most of them didn't do any tax planning. They didn't know their tax bracket. They had no idea how much they were supposed to pay.
Okay,
So,
stop, 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 stop,
okay.
stop, stop. You know all this. You are an expert. Listen, okay, hold on. But I do not know these things, and some of us don't know.
Okay.
What does tax planning mean? How does one tax plan, Tasha?
Well, when you know what your liability is, then you
Okay,
can plan ahead for it. And then guess what? If not enough taxes are coming out of your check, you can make adjustments on your
okay,
W-4. Okay.
okay,
And a lot of people only do it when they get hired. See, that's the thing. Most people do it that one time and then they never really go back to it. And you know how many life changes we have? We have kids. Kids grew up and go to college. Now we're no longer claiming them. We get married, we get divorced. All sorts of things happen that change how you should be taxed. So if you never updated that and year after year is passing, this is why you're losing and you're finding that you owed more because they didn't take out enough. And had you have known ahead of time and planned for it, you could have even sent in an estimated tax payment without waiting
gotcha,
to, yeah.
gotcha. Okay, that makes a lot of sense. Okay, so this is a lot. Okay. Oh, there it is. Okay. See,
Yeah.
technology. Look at that. Okay.
Right?
So you all, to understand what she's saying, we need to start tax planning. And a lot of times we don't tax plan, and then we end up having problems. And I had no clue that the taxes were this much on 100%, $100,000 of income. Now, what about if someone is making, let's say, half of that, 50%? Is the numbers similar? Do you know offhand?
Offhand, I don't know offhand, but that's why I put the source down there because if you go
Okay.
to that site, you can kind of see there's a table that shows you again, and you always need to know your tax filing status because this example I use the head of household. Yeah, there's the resource. So that's a great resource to refer to because you can look up your own individual situation if you're married, filing joint, if you're married, filing single, or if you're a head of household person, or if you're a single filer, because if you don't have anyone to claim, you're not considered head of household. You're just a single tax filer. So all of that varies in terms of the question you just asked me.
That is fantastic. Okay, I have another question because one of my viewers wrote in and they don't have it. They told me about it, so I'm just going to summarize the question.
Okay.
So he is a father and he is on child support, and the taxes are killing him. So, what would someone like that need to do? Are you saying they would need to go ahead and find an investment property or go ahead and open a business? I mean, what needs to happen for someone like in that situation? And one of the reasons I say that is because since they don't have physical custody, the money is just coming out and it's just going there and it's like bleeding.
Right. Yeah, absolutely. That is a very unfortunate situation. And I would say if that person is potentially does have an opportunity to create a side hustle or a business, because that's where you could see some savings. Because the thing is, we all pay out, we all have the same expenses. You have your mortgage, you have your cell, I have the same, we all have these things, our car expenses, and you can't even write it off. So, this dad, if he had this business on the side, he can be deducting these things. Yes, he has to report his business income, but at the same time, not only does it create extra money, okay, but also it creates the opportunity to write things off that he can't right now. So that is a big reason why he feels like he's not winning.
Gotcha.
Okay.
Okay, very good. Thank you. Oh
Yeah.
my goodness, this is so much. Okay, so you had some other goodies. Oh, we have a joke. Chuck Deasy said the key is to put everything in your mom's name. This is not advice from Tasha. This is
Right.
advice from someone else. Do not do this.
Right, exactly. And I
Okay.
actually have a link that I sent in if people want to start their own LLC. I actually have a course that I sent to your producer, and he could put the link up there. My course is amazing because it walks you through. There it is. It walks you through. It's a video course, and I literally teach you how to set up your own LLC. My course is so good that when you finish taking it, you can even set up LLCs for other people and charge them for the service. That's how good my course is.
Well, all right. I love it. I love it. This is fantastic. Okay, so she has the slide up, and then we also have starting the LLC. So this is exactly what she has. So this comment is here as well. Oh my gosh, Tasha, I am so excited. Okay, so another question in our discussion, we talked to you, said, well, are we going to be talking to business owners or small business owners? And I said, well, I want to do a mix because I know we have different types of people who are on. So what is any advice that you'd like to give to a small business owner other than what you've already said?
So one thing I would say, it's extremely important to do your bookkeeping, even if you have to outsource it to a freelancer or whatever. That is super important because that's what's going to help you figure out, first of all, if you're profitable, also what are your top sellers in your business, and also mainly so you're not losing out on deductions. Okay. So
Okay.
bookkeeping is extremely important. And also, please, everyone, tell me that you have a separate business bank account and you are not commingling funds with your personal bank account.
Of course, I have a separate banking account. That's all I'm going to say on. Um,
Okay. So
okay,
yeah,
so
that's super.
what if someone is commingling funds? What does that mean?
Well, it's when you're at the store or something, and maybe you're at the supermarket getting groceries, and now you take out your business debit card and you swipe it, or vice versa. There's things like when you're paying for your cell phone, you should be paying out of your business bank account, but then you pay it from your personal account, and vice versa. You should try to move as much as possible over there, and really, it's great to do that because let me tell you, building, establishing, and using your business bank account can help you to be the bridge to start building business credit. And business credit is amazing. It's separate from personal credit. You can have so much going on with business credit. It's just amazing.
Okay, can I ask you live on air if you would be willing to come back, maybe maybe at the end of January or in February, and talk specifically about building business credit? Would you be willing to do that?
I would. I would.
Okay, that would be fantastic because a lot of people don't even know business credit exists. And remember what I told you when we were growing up, us older people, we were not taught what to do with money. We were not taught how to invest. We weren't really taught. I mean, I didn't start a business. I didn't, get an MBA. So I didn't start a business and go to school and then I learned all of these case studies and do this and do that. And then I went and I filed this and I opened this. No, I was hustling. I had a job and then all of a sudden I didn't have a job and then somebody wanted to hire me as a consultant. Then all of a sudden I'm in business. Now here I am almost 23 years later and I didn't do a whole bunch of things right because I didn't know what to do. I was just figuring it out. I mean, that's what we do. I'm from the show me state. And so they were showing me.
Right.
Okay, awesome.
Exactly.
Okay, so Tasha, can you
Exactly.
tell us before we go, oh, I'm sorry. Okay. It's okay. All right. I'm sorry about that. We're communicating back and forth. So if you are watching on Facebook or you're watching on YouTube, we are talking about fixing finances for 2023. I want to thank everyone who has been here with us the whole time and those who will come back later. And we'll make sure every single link that Tasha has referred to is in the link. So when you review this video, you will be able to see everything that she's talked about. I am so excited about compound interest. And I want to go back because she said something about cryptocurrency. And I know there's been a lot going on with cryptocurrency. But one thing she did say is when you deposit your money, you use that as a bridge, just like if you were going to Jamaica. Now you
Right.
have to have a passport. If you're going
Right.
to England, if you're going to wherever you're going, you need that currency. So you take your US currency, you trade it in for there, you use that money they have, and then after you finish, you either spend it all and leave it there, with your life little hear me? Okay, I went out. I don't know if you all went out. If it was me, I went out. Okay, I'm good now. Sorry about that. Woo, we've had a lot of technical difficulties, I guess, because I am in Los Angeles and I'm not in my home studio. So please forgive me. But anyway, so I know crypto sounds a little scary, especially because of the news. And I don't want to really get into the news right now, but I will say that there are people who are very wealthy. And I want to go back to what you talked about investment property. I think that is, especially with interest rates so high, Tasha. How can somebody even think about getting into an investment property if they don't own anything, and now all of a sudden you want them to get an investment property? Let me tell you why I'm asking and what I'm exactly asking. I know that banks do come together and they get these portfolios of property, and then people go in and they invest in those portfolios of property. So they may own some multifamily housing, or they may own some apartment buildings or some condos or whatever. So they own a portion of it, but that's also part of their assets, and they can use that to leverage other things. Okay. And I think that's kind of what you were alluding to earlier when you're talking about compound interest and what they do. So how can a regular Joe Blow or authentic Joe get into buying some type of investment property with not little to nothing, or what do you have to do to build?
So I will say this, that investment property is not necessarily my area of interest, but some of the foundational stuff that I do know is that's another reason when I just mentioned business credit, because believe it or not, you can even use business credit to purchase investment property. Okay, so you're not purchasing it in your personal name. Okay,
Mhm.
so that's one thing where you can use some leverage if you're a little challenged on the personal side. Start yourself an LLC, get things going with your business credit, build it up, and then you can use it as leverage to put down and get up an investment property. Okay, but when you do have an investment property, you're also entitled to similar write-offs, same type of concept. I say to people, you maybe even want to buy an investment property in a place that you like to visit a lot, because guess what? Now, when you travel there, let's say you buy a property in Miami. Now, when you go to Miami, I got to check on my investment property. That trip becomes a tax write-off.
Gotcha.
Okay. So,
Gotcha.
you do smart things like that. And now when you do things like go away with your family, I'm not really going away with my family. This is my business advisory board. So
Okay.
this trip is tax deductible for all of us.
Gotcha. That's wonderful. Business advisory board. They don't have to be 18, do they?
Listen, I got a whole, and your producer said he was gonna put my YouTube up, because on my YouTube, I actually have another show I was on talking to a group of notaries where I taught them all about how you can pay them kids, because raising the kids, there it goes. Raising the kids is very expensive, but you can pay your kids and deduct even as much as like $12,000. You can pay them, and if you got 3 kids that's above age, they can at least be between the ages of 7 and 18. You can pay them and write all of that off and let them use their money to buy their clothes, to pay for their private tuition, to pay for their recreational activities. And this is all legal. I
That is
have one of
fantastic.
my
So you
episodes
said,
on there.
okay, that is fantastic. So you see her link, which is the Entrepreneur Help Desk. So this
Mhm.
is fantastic. I'm so excited, Tasha. That is great. Okay, so you can check her out. Okay, so what you just said was, if you have kids over the age of 7, that you can pay them up to $12,000 and write that whole $12,000 off.
That's
And
right.
then they can now use their own money to buy their stuff. But now you can do up to 3 kids, and that's 3 times 12. I know what that is. That's $36,000 that you can save yourself.
That's right.
That,
That's
that's
right.
amazing. That's amazing. Okay, so I have another question. Um, I know a lot of people personally, I've lost a little bit, and others have lost about 20% in 401ks, the value, because of what they were invested in. So if you're already in a 401k and you're losing money, is there anything that you can do? I mean, and I don't know if this is your area, so if it's not, please let me know. But is there anything that you can do to take that money and put it in another investment, or does it have to stay because it was already allotted for 401k?
So here's the thing, and it's so funny because I just did a Zoom the other day, my Zoom when I was talking about my investment company that I'm with, and I compared it. That whole show was about 401ks. And so exactly what you said happened. Like when you do things like borrow from 401ks, that's considered a loan you got to pay back. But like if you're in the investment company I'm with and you're building that up, if you want to take money out, that's not a loan and you don't have to put it back in. So yeah, but if you already have a lot there and you withdraw it and you're before the age that I think it's 59 and a half, you are going to deal with penalties and things like that. So there's a lot of things that kind of can't really be undone. But what I say to people is just begin to look at other investments, which is why I did my whole show last week on my Zoom about comparing the two. I did a comparison because when you invest with 401ks, that's moving up and down. Your value is moving up and down. It's not stable. Whereas if you're over here, it is. And just like I mentioned, if you want to take money out in a 401k before age 59 and a half, you're going to get penalized. If you're investing over here and you want to take it out between age 59 and before age 59 and a half, you're not getting penalized. So,
Okay.
there's so much there, but I guess people feel, and I'll tell you one hidden secret that a lot of people don't realize when your employer does employer match. A lot of times what's not being disclosed to you is that employer match is coming from the salary that you didn't even know you should have been getting.
Okay, hold on. What'd you just say? So, in other words, they had $10 to pay you, but instead of paying you $10, they offered you five, and now they're taking the
And
other $5
telling you, yep, and
and
said we're
and,
going to
and
do an
putting that in
employer
your.
match. They call it an employer match, but you didn't know it was code word for we just reduced your salary by X amount of dollars, and now we're making you think you're getting something by throwing it into your employer match 401k.
I'm writing this. I'm typing this in the comment. Employer match equals lower salary.
That's right. That's right.
What they didn't pay you. Oh my
That's
goodness.
right.
Oh my goodness. That is fantastic. Wow. That
Yeah.
is wonderful. Okay. Oh, okay. William McHugh said the employer gets $68,000 per year. Oh, I'm interested in that. I wonder what we're basing that. That's a lot. So yeah, I mean, oh, okay, because if they didn't pay you, then maybe that might be what they're getting. That is amazing. And then they're going in with the money that we're putting in and all the contributions that we're doing, and then they're doing more with their money too. So I mean, it is. I mean, I'm a little overwhelmed and I'm excited. And the employee match. Gotcha.
Okay.
Thank you,
And
William.
then you don't
Okay.
even know the industries they're putting it in. See, at least over here, I was transparent with you guys. I said they do trade our money. They're trading with cryptocurrency. Okay. They're worldwide. So they're also doing foreign exchange in other countries. Okay. They also own Bitcoin ATM machines, and they also make money they do Bitcoin mining. So they make money whether it's being bought or sold. So they have multiple ways that they're earning their money. Okay.
Gotcha.
But with
Gotcha.
401ks, you don't even know the industries your money's being invested in.
Right. Right. Okay, so Tasha, this is a hard one. I know, you're a real advisor and you're a tax person, so you may not be able to answer this question. Like you might have to plead the fifth like attorneys do, okay? But let's say if we know that the 401ks, because they're so volatile, and we say, okay, I want to change my 401k just like I want to change my tax bracket, but we're still earning that hourly money. What do you think about that? Because I think 401ks is not the answer, and I think we've learned that. But see, when you still are talking about this crypto and this Bitcoin.
So here's the thing. You can actually, well, first of all, you could set up your own. If you're self-employed, you can set up your own stuff over there. You can set up your own 401, your own IRA. You can do all of that as a self-employed person. And even if you're still employed by someone else, you can still set up separate accounts. But I will tell you something. I think a lot of us are sometimes afraid of change. And I'm
Yes.
going to tell you a few things I learned about crypto so far since I'm heavily into the company that I'm with. So one I learned in New York where I live, our mayor, when he got elected, he mandated, and you can Google this, he mandated that his first 3 paychecks be paid to him in crypto. Okay. So
Wow.
I'm trying to show that crypto is here to stay. I will also tell you that the state of Colorado, and again, you can Google this, the state of Colorado allows people, property owners, to pay their property taxes with crypto.
Wow.
So
Wow.
this is becoming a thing now. And as you get into crypto world, you begin to, your money is in something called an exchange. Like, for an example, when I sent my money in, I used Cash App, because on Cash App you can even buy Bitcoin. I had used Cash App to send in my Bitcoin. And when I took some money out because I wanted to see how it worked. And so when I withdrew some money, I actually used Coinbase to take the money out. But here's the thing, there's multiple exchanges at this point. I like to call them, what banks are to regular money is what exchanges are in crypto world. So the
Okay.
reason why I'm mentioning that is because there's an exchange called Binance that a lot of people, maybe even in your state, you can use it. Binance has now partnered with some sort of air flight company where people who have Binance accounts can actually use crypto to buy their plane tickets.
That's fantastic. Okay, let me ask you one thing, because you mentioned Cash App. I often worry, and I'm not trying to be gloom or doom, but you know how now that we have all these apps and everything, most people don't know my passwords and all that kind of stuff. So what would happen if someone passes and you have like money in your Cash App and nobody knows your password or anything like that? Because I know that one of the reasons that crypto is supposed to be secure is because people can't hack it and all that kind of stuff too. So I mean, is there a way that you can go in and designate a payee or something like that for these types of things?
So I'm not really sure for Cash App per se. They may have some sort of protocol in place. Like, I know from my investment company that I'm with, they actually, like, you can't designate beneficiaries, but they do have protocols in place for someone passes away and you have to submit death certificates and things like that in order to access and prove that you're next of kin in order for them to send.
Release.
Yeah, release. Or you can even continue the account if you want to have it transferred into your name, because
Gotcha.
the deceased may have built up quite a bit of money, as you see with that projections we were doing.
Right.
So, but these other apps, they all probably have a set of protocol to follow for
Hmm.
situations like that.
Okay, we have our resident comedian in who is saying Elon will allow you to buy a Tesla with Dogecoin. How dare you even mention his name on my channel? I have thoughts about him, but anyway, I'll keep them to myself because I don't think you all are ready for that. Oh yes,
Oh
and
my
he said no for
God.
real. I believe you. I believe you. I'm just not
Yeah.
choosing to do any. I mean,
Oh, he's for real. Okay. And I
yeah,
want to mention, how can I provide my email address? Because if anyone has questions, if they did decide to invest, I want them to be able to contact me if, they need some assistance
just type
because
it. Just type
they
it in the comments, and then
might.
I'll highlight it.
Okay.
You don't need to put your specs on for that one.
I know, right? The funny thing is that I see, so private chat, I have a chat box,
No, don't use the private chat. Just do the live chat.
but I
And
don't
you.
see the chat box. Where do I type
Oh,
it?
okay. Private chat. That's what the
Okay.
producer's telling me.
Okay.
Okay.
So let me see.
Okay, you all. I just want to say before we leave, I want to thank our guest Tasha Hardge for being here talking about tax strategies and financial literacy. She's given us a great thing. If you're just now tuning into the show, you can learn how to take $500 and invest over 8 years and make a lot of money. Okay, one investment of $500. Okay, I'm personally going to do this, and I'll keep you guys updated because she said we can get weekly statements. It costs you $25 a month for them to maintain the account, but why not? Okay, so stop drinking that Starbucks or whatever it is. No offense against Starbucks, but stop
Or
drinking all this
buying them
stuff.
handbags. No
Thank
offense.
you. Thank you. Thank you. Thank you. Okay. Personally, I'm just going to say it. I'm just going to give one of my deep secrets. Okay. Drum roll, please. My favorite coffee is Aldi coffee. I don't know if you all even have Aldi in New York. Do you all have that, Tasha?
What's it called?
Aldi, the store Aldi's.
Yeah, we do have some in New York.
Okay, so that store has the best French vanilla coffee, and you can get 12 Keurig cups for less than $5. Okay, All right, that's what I want you all to know. So I'm just telling you, I have just saved you. If you get a coffee every single day from Starbucks, I have just saved you over $25. That's 1 month.
Right, exactly.
Or go get some hazelnut. Okay. All right. So, okay. And Joy. Oh, yes. Joy is one of our faithful watchers. She says she loves the info and the New York accent. Okay. So, if you all have heard anything that is intriguing to you, if you'd like to work with Tasha about your taxes, if you'd like to work with her regarding this investment program, please reach out to her. And we're going to have all of the links. Her email address is khardge@gmail.com. And we're going to have all of the links in the stream so that you'll be able to reach out to her. Tasha, I want to thank you so much for this great information. And I think it's important. One more thing before people go into 2023. If you say do one thing, if you don't do anything else, what's one thing you would tell them to do? I know what I'm going to recommend based on what you told me, but what would you say?
Invest.
That's what I'm talking about, you all. Invest. Okay, invest. Okay, Tasha, thank you so much. Can you hang on in the studio while we close out the show?
Sure.
Okay, thank you so much. I really appreciate you all. You all just khardge@gmail.com is how you'll reach her. And I'll see you in just a minute, Tasha. Okay. All right. So I am going to do my final thoughts. Everybody, this has been an amazing show. I am so excited because we learned from an expert what to do with our money. I know times are tough, but one of the great things Tasha said was we're trying to earn our dollars and we'll never make it that way. So if we go ahead and figure out and use her email, use these links, and just even if you take $250, take $250 instead of going and buying all these toys and things like that for Christmas. Just take $250 and invest it for your kids. Okay. I tell you, I wish that he had done that for me back when I was young. I can't even imagine how much money I would have. And I'm sorry that my internet connection has been a little weird. I'm in California. I'm in Los Angeles. You all may see some of the videos and things that I post, but I'm so excited to be here for the week. And I'm so excited about helping you build a foundation of fixing your finances. So if you have $500, $5,000, or $50,000 to invest, do it now. Learn more about compound interest. We have the link and you have no excuse not to make more money in 2023. I'm Jolena Johnson. I want to thank you so much for watching live on YouTube and on Facebook. And if you like what you've heard today, please share it, please like it, and please come back again and again. We'll see you next Tuesday. Thank you so much.